ಡಾಕ್ಟರ್ ಸೂರ್ಯರಾಜು.
ಎಸ್ ಸರ್, ಒಂದು ನಿಮಿಷ. ಮೊದಲನೇದಾಗಿ ಎಲ್ಲರಿಗೂ ಇವತ್ತಿನ ಈ ಕಾರ್ಯಕ್ರಮಕ್ಕೆ ಸುಸ್ವಾಗತವನ್ನು ಬಯಸುತ್ತಾ, I want to congratulate Public Health Forum for selecting a wonderful topic, money management for doctors, which is very much essential these days. Doctors are good in treating the patients and managing the patients. Sometimes I feel we are not so good in money management. Today, money is very important. Passive income is also equally important. Investment is also rightly important, and compounding is important, because once we have multiple sources of income, then it will reduce our stress and burden, and we can focus on the work in better way. We can give services in better way. As rightly said, I welcome Dr. Shirish M. Nagasapur. Actually, I personally feel in our MBBS curriculum and PG curriculum, we should have one subject or part of our training program about the finance management for the doctors, because most of us, we think that our profession and medical knowledge is sufficient. That will give us the best thing. So with this opening remarks, let us listen from the doctor regarding the money management, and I would like to start this program with IMA prayer. ಭಾರತೀಯ ವೈದ್ಯಕೀಯ ಸಂಘದ ಪ್ರಾರ್ಥನೆ. ಎಲ್ಲರೂ ಸಂತೋಷವಾಗಿರಲಿ, ಎಲ್ಲರೂ ಆರೋಗ್ಯವಾಗಿರಲಿ, ಎಲ್ಲರೂ ನೋವಿನಿಂದ ಮುಕ್ತವಾಗಿರಲಿ, ಎಲ್ಲರೂ ದುಃಖದಿಂದ ಮುಕ್ತವಾಗಿರಲಿ, ಎಲ್ಲ ಆಸೆ ಆಮಿಷಗಳನ್ನು ಮೀರಿ ಗುಣಪಡಿಸುವವರು ನಾವಾಗಿರಲಿ. ಧ್ವಜವಂದನೆ. ಭಾರತೀಯ ವೈದ್ಯಕೀಯ ಸಂಘದ ಸದಸ್ಯರಾದ ನಾವು ನಮ್ಮ ರಾಷ್ಟ್ರ ಧ್ವಜಕ್ಕೆ ವಂದನೆ ಸಲ್ಲಿಸಲು ಇಲ್ಲಿ ನಿಂತಿದ್ದೇವೆ. ಅದರ ಗೌರವ ಮತ್ತು ವೈಭವವೇ ನಮ್ಮ ಬೆಳಕು ಮತ್ತು ಶಕ್ತಿ, ಮತ್ತು ಅದರ ಪಥವೇ ನಮ್ಮ ಪಥವು. ಈ ರಾಷ್ಟ್ರೀಯ ಸಂಸ್ಥೆಯ ಮಾನ್ಯತೆ ಪಡೆದ ಸದಸ್ಯರಾದ ನಾವು ನಮ್ಮ ಜವಾಬ್ದಾರಿಗಳನ್ನು ಅರಿಯುವ ಮೂಲಕ ಅದಕ್ಕೆ ನಮ್ಮ ನಿಷ್ಠೆಯನ್ನು ತೋರಿಸುವ ಪ್ರತಿಜ್ಞೆ ಮಾಡುತ್ತಿದ್ದೇವೆ. ದೇಶ ಸಮೂಹಗಳ ನಡುವೆ ನಮ್ಮ ರಾಷ್ಟ್ರ ಧ್ವಜವು ಉನ್ನತ ಮಟ್ಟದಲ್ಲಿ ಹಾರಾಡುವ ಸಲುವಾಗಿ ನಮ್ಮ ಅಧಿಕಾರದಲ್ಲಿರುವ ಎಲ್ಲವನ್ನೂ ಅದಕ್ಕೆ ಸಮರ್ಪಿಸುವ ಪ್ರಮಾಣ ಮಾಡುತ್ತಿದ್ದೇವೆ. ಜೈ ಹಿಂದ್. IMA ಚಿರಾಯವಾಗಿರಲಿ. First of all, I want to congratulate Dr. Pawan Patil and Dr. Rajendra Prasad for electing such a wonderful topic. Thank you, sir.
Sir, you are muted, sir.
Can you hear me, sir?
Yes, sir. Yes, sir.
ಸರಿ ಸರ್. ಎಲ್ಲರಿಗೂ ಈ ಸುಂದರ ಸಂಜೆಯ ಕಾರ್ಯಕ್ರಮಕ್ಕೆ ಈ ಪಬ್ಲಿಕ್ ಫೋರಂನ ಚೇರ್ಮನ್ ಆಗಿ ನಾನು ಪ್ರೊಫೆಸರ್ ಡಾಕ್ಟರ್ ಪವನ್ ಕುಮಾರ್ ಎಲ್ಲರಿಗೂ ಸ್ವಾಗತವನ್ನ ಬಯಸ್ತೇನೆ. ಮೊದಲನೇದಾಗಿ ನಮ್ಮ ರಾಜ್ಯದ ಅಧ್ಯಕ್ಷರಾದ ಡಾಕ್ಟರ್ ವೀರಭದ್ರ ಅವರಿಗೆ ಸ್ವಾಗತವನ್ನ ಬಯಸ್ತೇನೆ. ಹಾಗೆ ನಮ್ಮ ರಾಜ್ಯದ ಕಾರ್ಯದರ್ಶಿಯಾದ ಡಾಕ್ಟರ್ ಸೂರ್ಯರಾಜು ಅವರಿಗೂ ಸ್ವಾಗತವನ್ನ ಬಯಸ್ತೇನೆ. ಇನ್ನ ನಮ್ಮ ಸ್ಪೀಕರ್ ಆದ ಡಾಕ್ಟರ್ ಶಿರೀಶ್ ನರಸಾಪುರ್ ಅವ್ರಿಗೂ ಕೂಡ ನಾನು ಸ್ವಾಗತವನ್ನ ಬಯಸ್ತೇನೆ. ಹಾಗೆ ನಮ್ಮ ಆರ್ಗನೈಸಿಂಗ್ ಕಮಿಟಿಯ ಡಾಕ್ಟರ್ ರಾಜೇಂದ್ರ ಪ್ರಸಾದ್, ಹಾಗೆ ಇನ್ನು ನಮ್ಮ ಸೀನಿಯರ್ ಪದಗಳು ಸಾಕಷ್ಟು ಜನ ಜಾಯಿನ್ ಆಗಿದ್ದಾರೆ. ಡಾಕ್ಟರ್ ನಂದೀಶ್ ಇದ್ದಾರೆ, ಡಾಕ್ಟರ್ ನಾರಾಯಣ್ ನಾಯಕ್ ಇದ್ದಾರೆ. ಹಾಗೆ ಎಲ್ಲರಿಗೂ ಕೂಡ ನಮ್ಮ IMA ಫ್ಯಾಮಿಲಿಗೆ ಒಂದು ನಲ್ಮೆಯ ಒಂದು ಸ್ವಾಗತವನ್ನ ಇರ್ತೇವೆ. ಯಾಕೆಂದ್ರೆ ಇಲ್ಲಿ ನಾವು ಎಲ್ಲಾ ವೈದ್ಯರು ಕೂಡ ಸಾಕಷ್ಟು ಕಷ್ಟಪಟ್ಟು ದುಡ್ಡಿ, ಆದ್ರೆ ದುಡ್ದಿರೋದು ಎಲ್ಲೋ ಒಂದ್ ಕಡೆ ನಮ್ ಕೈಲಿ ಒಂಚೂರು ದುಡ್ಡು ಕೂಡ ಉಳಿಯೋದಿಲ್ಲ. ನಾವು ನೋಡ್ತೀವಿ ಯಾಕಂದ್ರೆ ನಾವೆಲ್ಲ ಎಲೈಟ್ ಗ್ರೂಪ್ ಅಲ್ಲಿ ಬರ್ತೀವಿ. ನಾವು ಒಂದು ಸಮಾಜದಲ್ಲಿ ಎಲ್ಲಾ ಡಾಕ್ಟರ್ಗಳು ಕೂಡ ಎಲೈಟ್ ಗ್ರೂಪ್ ಅಲ್ಲಿ ಇರ್ತೀವಿ. ಎಲ್ಲರೂ ಕೂಡ ಒಂದು ಉನ್ನತವಾದ ಒಂದು ಸ್ಥಾನ ಕೊಡ್ತಾರೆ. ಆದ್ರೆ ಆ ಸ್ಥಾನಕ್ಕೆ ತಕ್ಕದ ಒಂದು ಆರ್ಥಿಕ ಒಂದು ಗೌರವ ಒಂದ್ ಕಡೆ ಸಿಗ್ತಾ ಇಲ್ಲ ಅಂತ ಅನ್ಸುತ್ತೆ. ಎಲ್ಲೋ ಒಂದ್ ಕಡೆ ನಾವು ಬ್ಯಾಡ್ ಫೈನಾನ್ಷಿಯಲ್ ಮ್ಯಾನೇಜರ್ಸ್ ಆಗಿರ್ತೀವಿ, ಅಥವಾ ನಾವು ದುಡ್ದಿರ್ತಕ್ಕಂಥ ದುಡ್ಡನ್ನ ಎಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ ಮಾಡಬೇಕು, ಯಾವ ರೀತಿಯಾಗಿ ಖರ್ಚು ಮಾಡಬೇಕು, ಯಾವ ರೀತಿಯಾಗಿ ಅದನ್ನ ಸೇವ್ ಮಾಡಬೇಕು, ಎಲ್ಲೋ ಒಂದ್ ಕಡೆ ಅದನ್ನ ನಾವು ಸರಿಯಾಗಿ ಸರಿದೂಗಿಸ್ಕೊಂಡು ಹೋಗೋದಲ್ಲಿ ನಾವು ವಿಫಲರಾಗಿರ್ತೀವಿ ಅಂತಾನೆ ನಂಗೆ ಅನ್ಸುತ್ತೆ. ಎಲ್ಲೋ ಕೆಲವು ಡರ್ಗಳು ಬಿಟ್ರೆ ಎಲ್ಲರೂ ಕೂಡ ಇದರಲ್ಲಿ ಒದ್ದಾಡ್ತಾ ಇರ್ತಾರೆ. ಇವತ್ತು ಅದಕ್ಕೆ ಒಂದು ಸರಿಯಾದ ಒಂದು ರೂಪವನ್ನ ಕೊಟ್ಟು ನಮ್ಗೆ ಒಂದು ಸರಿಯಾದ ಒಂದು ದಿಕ್ಕನ್ನ ತೋರಿಸೋದಕ್ಕೆ ಶಿರೀಶ್ ನರಸಾಪುರ ಅವರು ಇದ್ದಾರೆ. ಸೊ ಇವತ್ತು ಅವರ ಮಾತನ್ನ ನಾವು ವೈದ್ಯರು ಸ್ವಲ್ಪ ಬುದ್ಧಿವಂತರಾಗಿ ಯಾವ ರೀತಿಯಾಗಿ ಆರ್ಥಿಕವಾಗಿ ಕೂಡ ನಾವು ಸದೃಢವಾಗಿ ಇರ್ಬೋದು ಅನ್ನೋದನ್ನ ನಾವು ಇವತ್ತು ನೋಡ್ಕೊಳ್ಳೋಣ. ಸೊ ಮೊದಲನೇದಾಗಿ ಈ ಕಾರ್ಯಕ್ರಮವನ್ನ ವಿದ್ಯುಕ್ತವಾಗಿ ಚಾಲನೆ ಕೊಡೋದಕ್ಕೆ ನಮ್ಮ ರಾಜ್ಯದ ಅಧ್ಯಕ್ಷರಿಗೆ ನಾನು ಕೇಳ್ಕೊತೀನಿ. ವೀರಭದ್ರಯ್ಯ ಸರ್, ದಯವಿಟ್ಟು ಇಂದಿನ ಕಾರ್ಯಕ್ರಮವನ್ನ ಶುರು ಮಾಡಬೇಕಾಗಿ ಕೇಳ್ತೇನೆ. ಹಲೋ. ಸೂರ್ಯರಾಜು ಸರ್.
ಸರ್ ಜೊತೆ ಮಾತಾಡ್ತೀನಿ ಒಂದ್ ನಿಮಿಷ.
ಹಲೋ
ಸರ್.
ಸರ್ ಅಲ್ಲೇ ಇದಾರೆ.
ಇದೀನಿ, ನಾನು ಮಾತಾಡ್ತೀನಿ. ಒಂದ್ ಸೆಕೆಂಡ್. ಎಲ್ರಿಗೂ ನಮಸ್ಕಾರ. ಈ ಒಂದು ಕಮ್ಮಟನ ಏರ್ಪಡಿಸಿರೋದು ತುಂಬಾ ಸಂತೋಷದ ವಿಷಯ. ಯಾಕೆಂದ್ರೆ ನಾವು ಡಾಕ್ಟರ್ಸ್ ಸುಮ್ನೆ ದುಡಿತಾ ಇರ್ತೀವಿ, ಎಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ ಮಾಡ್ಬೇಕು, ಏನ್ ಮಾಡ್ಬೇಕು, ಹೆಂಗ್ ಉಳಿತಾಯ ಮಾಡ್ಬೇಕು ಅನ್ನೋದ್ರ ಬಗ್ಗೆ ಅಷ್ಟು ಹೆಚ್ಚಿನ ಗಮನ ಕೊಡಲ್ಲ. ಸೊ ಸುಮ್ನೆ ದುಡಿತೀವಿ, ಒಂದ್ ಸ್ವಲ್ಪ ಖರ್ಚು ಮಾಡ್ತೀವಿ, ಸೇವಿಂಗ್ ಮಾಡ್ಬೇಕು, ಎಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ ಮಾಡ್ಬೇಕು ಅನ್ನೋದ್ರ ಬಗ್ಗೆ ಇವತ್ತು ನಮ್ಗೆ ಕಲ್ಸ್ಕೊಡಕ್ ಬಂದಿದ್ದಾರೆ ಶ್ರೇಯಸ್ ಅವರು. ಇದು ಯಶಸ್ವಿಯಾಗಿ ಜರುಗ್ಲಿ, ನಾವೆಲ್ಲ ಇವ್ರದ್ದು ಹೇಳ್ಕೊಡೋ ಅಂಥದ್ದನ್ನ ಅಳವಡಿಸ್ಕೊಳ್ಳೋ ಅಂತ ಪ್ರಯತ್ನ ಮಾಡೋಣ ಅಂತ ಹೇಳ್ತಾ ಈ ವೆಬಿನಾರು ಚೆನ್ನಾಗಿ ಮೂಡಿ ಬರಲಿ ಅಂತ ಹಾರೈಸಿ ನನ್ನ 2 ಮಾತು ಮುಗಿಸ್ತೇನೆ. ಧನ್ಯವಾದಗಳು.
ಥ್ಯಾಂಕ್ ಯು ಸರ್, ಥ್ಯಾಂಕ್ ಯು ವೆರಿ ಮಚ್ ಸರ್. ನಮ್ಮ ಇಂದಿನ ಮುಖ್ಯ ವಾಗ್ಮಿಕರಾದ ಶಿರೀಶ್ ನರಸಾಪುರ ಅವರ ಒಂದು ಕಿರು ಪರಿಚಯವನ್ನ ಡಾಕ್ಟರ್ ಶ್ರೀಸ್ ಅವರು ಮಾಡ್ಕೊಡ್ಬೇಕಾಗಿ ಕೇಳ್ಕೊತೇನೆ.
ಇಲ್ಲ ಮೇಡಮ್, ಜಾಯಿನ್ ಆಗಿಲ್ಲ ಅನ್ಸುತ್ತೆ ಸರ್.
ರಾಜೇಂದ್ರ ಪ್ರಸಾದ್ ಸರ್, ನೀವೇ ಒಂದು ಕಿರು ಪರಿಚಯ ಮಾಡಿ.
ನಾನೇ ಹೇಳ್ತೀನಿ ಸರ್, ಅವ್ರದ್ದು ಪರಿಚಯ ಅಷ್ಟೇನೆ ಹೇಳಿ ಅಂತ ಹೇಳಿದ್ರು ಅವರು. ಡಾಕ್ಟರ್ ಶಿರೀಶ್ ನರಸಾಪುರ್ is a orthopedics and sports medicine consultant with 20 years of experience. He is associated with WealthCon since 2021. Probably he will be introducing himself more. Thank you sir, thank you very much.
ಸರ್, ನಾನು ಒಂದ್ ಮಾತು ಹೇಳಕ್ ಪಡ್ತೀನಿ. ಯಾಕಂದ್ರೆ ಡಾಕ್ಟರ್ ಶಿರೀಶ್ ನರಸಾಪುರ್ ಅವರು ನಾವು ಯಲಹಂಕಲ್ಲಿ ಮೆಡಿಕಾನ್ ಸ್ಟೇಬಲ್ ಕಾನ್ಫರೆನ್ಸ್ ಮಾಡಿದಾಗ ಇಲ್ಲಿ ಹೆಲ್ತ್ಕಾನ್ ಕಡೆಯಿಂದ ಒಂದು ಹಾಫ್ ಡೇ ಪ್ರೋಗ್ರಾಮ್ ಅನ್ನ ಕೊಟ್ಟಿದ್ವಿ. ಇವರ ಟೀಮ್ ತುಂಬಾ ಸೊಗಸಾಗಿ ನಡೆಸ್ಕೊಟ್ರು. ಯಾಕಂದ್ರೆ ಎಲ್ಲರೂ ಕೂಡ ತುಂಬಾ ಲೈಕ್ ಮಾಡಿದ್ರು. ಇವರ ಟಾಕ್ ಕೂಡ ಹೋಗ್ತಾರೆ. ಸೊ ಇವತ್ತು ಕೂಡ ಇವರ ಟಾಕ್ ನಮ್ ಎಲ್ಲರಿಗೂ ಕೂಡ ಉಪಯುಕ್ತ ಆಗತ್ತೆ ಅಂತ ಹೇಳ್ತೀನಿ. ಓವರ್ ಟು ಡಾಕ್ಟರ್ ಶಿರೀಶ್ ಸರ್.
Sir, thank you. Namaskar ellarigu. Good evening everyone. Since of course this is a majorly Kannada branch of IMA, we are all very well versed with Kannada, ನನಗೆ ಗೊತ್ತು. But I think there are pretty good number of people who have joined also from outside Karnataka, because this link has been shared outside. So I'll keep my presentation in English so that it is easier for everyone to understand. ಮಧ್ಯ ಕನ್ನಡದಲ್ಲಿ ಬರುತ್ತೆ ಮಾತು, ಬಟ್ those people who do not understand Kannada, I'll correct it better. I'll try to correct it better.
Okay.
So thank you IMA, and thank you Rajendra Prasad sir for sending me the invitation for speaking on a very important topic, that is financial health for doctors. Dr. Narayan Nayak sir is there, who was joined. He is also a very senior WealthConian and a very I mean, he is a very experienced WealthConian, so he'll also be there to help me around if I'm faltering the presentation. So can I start sharing the screen, sir?
Share, sir.
Yes, sir, you can, sir.
Okay. I hope the presentation is visible now clearly.
Yes, sir.
So it is customary for us at WealthCon to begin the presentation with a thank you slide for sparing the time at this hour after finishing your busy practice to come and join and learn an important to get an important knowledge about financial independence. A brief about WealthCon. It is a movement which was started by Dr. Ramnath Kuthe. He is a very eminent radiologist in Bombay who started this movement of WealthCon, which is a movement which teaches financial independence to the doctors, and it is only by the doctors. There are no third party involved in this movement. So only MBBS doctors are taken into WealthCon because we all need a common platform. We all need a common platform so that we can move forwards. So currently there are about 250 senior guides in WealthCon who are a part of a larger teaching group who keep on teaching other doctors through various courses in accordance to WealthCon. And I'm not saying that only 250 doctors are there teaching, but currently WealthCon has touched more than 5 lakh doctors across the world, Indian doctors across the world. So today's topic, I want to keep it very simple, which even a beginner can immediately start applying in the financial knowledge. You don't have to even see, there will be a lot of doubts in your mind that, I don't know about finance, anything. I don't know what investment, I don't know how to do it. But after this presentation, I am confident that tomorrow, not tomorrow, Saturday, but tomorrow when the market opens on Monday, you will be able to start investing without having to worry about what is going to happen to your investment. So this is called as personal finance, and we are going to discuss today wealth creation by ETF alone. The topic is divided into mutual funds and ETF, but I am going to keep it very simple. I am not going to discuss about mutual funds also, only about the exchange traded funds. And to know why doctors should start investing in equity. I am Shirish Narsapur. I am consultant arthroscopy and sports medicine surgeon based in Mysore. But I do freelancing. I do come to Bangalore as well as Raichur for surgeries, arthroscopic surgeries only. Now, I am only 45-year-old. I have a decent experience of almost 20 years in orthopedics. I have chosen at this age to remain into arthroscopy and sports medicine alone. I do not want to break my head into the orthopedic things which I do not have aptitude for, especially the spine. And also the high paying surgeries like joint replacements or the bread and butter trauma. So one would ask why I have chosen myself to remain in this arthroscopy and sports medicine field alone. Here I'm trying to apply the 80-20 principle in life. 80-20 principle says, the Pareto principle says that the 80% of your earning comes from the 20% of the patients which you see. But you are actually giving only 20% of the time to them and 80% of the time to those patients who are not giving you anything. Now, this might sound a little confusing when I'm saying that, you're giving those much time to that. A personal anecdote I would like to give. Previously, when I was working as a full-timer, I was seeing almost 50, 60 patients in OPD every day. Out of that, hardly 1 or 2 used to be a real surgical case, which I am inclined with, the arthroscopy and sports medicine. The remaining 45 to 48 patients used to be just OPD aches and pains or back pains or something which I do not have aptitude for. I'm not saying that I don't like those patients or anything, but that increases your workload. You want to be fresh when you are at work. When you finish the work, you should not be feeling drained. So now I have selected arthroscopy only because that is what I want to do. Now I do not see other patients. This means that I have more time for myself. I have more time for my family. I have more time for doing my personal things along with doing a healthy practice as well. Sorry, I think the screen share got cut or something.
It is not moving, sir.
Okay, the screen is still on, right?
Yes, sir, it is seen.
I
Please go
cannot
to
see
the
the
next screen, sir.
Just I cannot see the screen. That is a problem. Let me stop it and share it again, sir.
Oh, yes, sir. Yes, sir.
Yeah.
Now it is seen.
Now it is seen.
Yes, sir.
Is my video also? Okay, fine. Yeah. So coming back to the 80-20 principle. So I have applied that, and now I'm getting, as I mentioned, more time for myself, for my family, for my other interests, other hobbies and everything. At the same time, my passion of doing arthroscopy and sports medicine, I'm continuing. So this means that right now I can call myself as a retired person because I am not working on the weekends. At the age of 45, I am not working on weekends. Saturday and Sundays are totally for myself. After 3 o'clock, when I come back home, there are no emergency calls for me. I don't know, the patient has come, doctor, there's an emergency surgery or anything. So this all was possible because I learned to become financially independent. Now, this does not mean that one should leave off their active practice. This only means that, being financially independent, you can focus more on your passion, your area of interest. So you can actually benefit more number of patients in your liking. You cannot be jack of all trades and master of none. I do not call myself as master. I am not a master. I'm still a student of life. Still a student of orthopedics, still a student of arthroscopy. I consider myself a student for life. But the passion which has now come in me to only cater to the arthroscopy patients, I am now giving much better results to my patients because I have streamlined myself and I read only about this subject. It's okay. It's okay. There are so many other people who can do better job than me in spine, in joints, in trauma. So if any patient comes, I refer them. I'm happy because I do not want to take the headache of just because someone has referred me and it is on my ego that I have to do it. How can I refer? No. In a way, this has improved my practice and it has improved my patient results. Largely, it is benefiting the society. And the same thing is going to be experienced by each and every one of you. There are a lot of people who are there on Welcome, as I mentioned, Dr. Narayan sir. He has also experienced the same thing. So without wasting much time into my personal anecdotes, let us begin the presentation quickly because there will be a lot of time for interaction and question answer sessions also. So this typical graph of how a doctor's life is, wherein, the early 20, 28, 30 years, you go on learning, gathering new skills. There's a long period of education. After that, by the time you start a job, you're already in a marriageable age. Then you get married, you have kids, you have responsibilities. Some want to open their own hospital. Then you want to build up your house. By the time you are little settled in job, your kids are already into the 10th standard or 12th standard. And by the time you reach your sort of peak, your kids are getting married. Within no time, you will feel, okay, now what about the retirement? All this time, you have been focusing only on the active earning. Active earning means when you are going to the hospital yourself or your clinic or wherever you go, and that the accumulation phase, that is when you will realize that after you have accumulated, there is nothing left after retirement. Or God forbid, if there is any accident during the accumulation phase when you're working and it renders you immobile or out of work for some time, that adds up to the tension. And personally, I have had two life-threatening events myself, freak accident and then freak cardiac event as well very recently, which threw me out of work for quite a bit time. But then during the time when I was home, I was not worried about, okay, what's happening to my earning? What will happen to my family? Because I'm confident that I can manage, even if I am immobile and I'm not able to go to work, I can still manage my finances. The highest form of wealth is the ability to wake up every morning and say, I can do whatever I want today. I can do whatever means, whatever in whatever sense, be it in the personal hobby field or your work front, whatever it is. So that confidence which it gives you, that has no parallel. So we are going to learn investment because we are supposed to be working not for money. We are supposed to work for passion. And this is what the truth is. If you work for your passion and if you let the money work for you, you can create wealth. You can amass more wealth than having to work for money. Nobody has become a king by getting salary. Instead of discussing on all these topics individually, I would like to just highlight that, the insurance, the only insurance which we require is health insurance and term insurance personally for health and disease. So never mix insurance with investment. That is your LI. I'm not going to specifically mention any company here, but life insurance policies, the endowment policies by any company, they are all useless. They are all worthless because they do not give you anything. They actually have very high premiums and there's no benefit for them. So the only insurance for you is a health insurance and a pure term insurance. Term insurance is you pay approximately, it's for the life. Like anything happens to me, my family right now, I'm insured for almost 3.5 crores. So if anything were to happen to me today, no questions asked, my family will get 3.5 crores. That will not happen with an endowment policy, never. So never mix insurance with investment. Keep insurance separate, investment separate. We'll take this up on question answers session, okay, all these things. Because of the time constraints, let me directly jump on to what we are here to learn today. That is learning how to invest in the market. So the financial products which are available for us are plenty. There are financial products which are available for wealth creation, financial products available for wealth protection, and financial products available for wealth destruction. As I mentioned, the ignorance policies and the fixed deposits. So why I say that, the fixed deposits are useless or anything? See, it is not that fixed deposits are entirely useless. There is a purpose for your money. For short-term goals, for short term, your goal should not be wealth creation. Your goal should be wealth protection. For long term, your goal should be wealth creation, not wealth protection. So instruments are available for each. Now, what we people do is we feel that FDs are safe. The fixed deposits and everything are safe. The public provident fund, the post office schemes, they are safe because they give you a constant 6% of in returns every year. Now I want to ask you, what will happen if tomorrow, suddenly, overnight, the bank decides to close? It has happened before. The banks have closed. What is the liability of the bank towards you? Even if you have 5 crores in your account, if the bank closes tomorrow, the bank is liable to give you back only 5 lakh rupees. That's all. Their liability ends. So what trust do you have that your FDs are safe? So the FDs will give you 6% per annum, but the inflation is also rising at 6%. So that means that 100 rupees kept today, after 1 year, its value will become 94 rupees only. So your buying capacity, because of the inflation, the buying capacity, it will become only 94 rupees. So actually your losing the value for your hard-earned money if you keep it in FD for long. For short term, like for 1 year or 2 years, you want this kind of a money, like I want 15 lakhs or something, which I do not want to lose. There is a chance of losing in equity if you're investing, if you're taking larger risk. So that, excuse me, just a moment, just a moment. Am I audible?
Yes, sir. Yes, sir, you are. Yes, sir, you can go ahead.
Am I audible?
Yes, sir. Yes, sir, you are audible. Loud and clear, sir.
I can't hear. Am I audible? I don't know. Hello.
Yes, sir.
Yes, sir,
You
you're
are
audible.
I'm so sorry. I'm so sorry. I thought the meeting got disconnected or something because I got a message. Anyway, so for wealth creation, the option which you have is equity, mutual funds, gold, real estate. Now, many of the doctors are doing real estate since long time, and it's good, to have that real estate thing also. So there's a diversification which is required in gold, in equity, in real estate, and in debt. Here I'm not discussing about everything in detail about real estate and everything. Those people who are doing real estate, they are very experts in doing real estate. Real estate is not everyone's cup of tea. And it has seen that, those people who are in real estate, they find equity not their cup of tea. But here I'm trying to, in the next half an hour, trying to show that equity is very simple and it can be made risk-free by certain adjustments. So the diversification, as I was mentioning, was in GRED, that is gold, real estate, equity, and debt. The allocation or the diversification is an individual choice. How much I want to put it in gold, or how much I want to put it in equity, or how much I want to put it in real estate or debt or anything. It's an individual choice based on the individual risk appetite. But it is recommended that whatever your age is, subtract that from 100, and whatever comes, invest that in equity. 100 minus, if I'm 45 today, 100 minus 45 is 55. So 55% of my earning for investment, I should invest in equity. But I've learned that, little risk if I take more. In the safe limit, I can earn a little more. So I am investing almost 80% of my earning in equity. That means I'm investing like a 20-year-old. So here the FD being the myth of wealth creation, as I mentioned, we can take that in question answer sessions. Let me finish off with the ETFs first completely. After that, in question answers, we can discuss why this, why not. So the exchange traded funds are something which every one of us can start right from Monday, because they are the simplest and the easiest way of investing in a market. You do not require to study any fundamentals or any technical analysis you need to do for investing in exchange traded funds. Now, what are exchange traded funds? They are basically mutual funds itself, but they are listed. Listed means it can be bought and sold like shares. For mutual funds, there is a company, an asset managing company, which takes in a lump sum amount and they start investing in certain companies of their choices. But here, the exchange traded funds, the asset management company invests directly into the index. Now, what is index? Index is the conglomeration of the top companies which are listed on the National Stock Exchange. You must have heard the name Nifty. Now, what is Nifty? Nifty is the National Stock Exchange's index, Nifty. So Nifty comprises Nifty 50, that is Nifty 50 comprises of the top 50 companies which are listed on National Stock Exchange. Next comes Nifty Next 50, also called as junior Nifty Next 50, that is ranked from 51 to 100. And then comes mid 150, that is ranked from 101 to 250. So this is how they have divided the index into small cap, mid cap, and large cap. So the top 50 companies, they are considered as large cap. The next ones are considered as mid cap, and then the next comes the small cap. So when you invest in an index through an exchange traded fund, your money automatically gets invested into these top performing companies. Now, what is the difference between investing in an exchange traded fund and investing in a company individually? See, if you invest in a company individually, you need to study its fundamentals. You need to study how the company is performing. Lot of study has to be done for that. But there is no guarantee that that company will survive for long. What company had good fundamentals over a period of time because of bad management or anything, their company has failed. So there is a possibility that an individual company will fail. It has happened in the past, it will happen in the future as well. But index as a barometer of the Indian economy, it will never fail. Because when you are saying that the top 50 companies, they keep changing. Now, if a company in the top 50 is not performing, that will be relegated. Its rank will be going down from below 50. And then another performing company will be got back into the top 50. So it goes to say that, the top 50 company, the index will keep on going up. Of course, in short term, there will be cycles like the prices are going up, prices are coming down, prices go up, come down. That is how the cycle of the market is. But in the long term trend, it is only going to look up. And an individual company might fail, it might become zero. Its value might become zero, but index will never become zero. It has not happened during the Great Depression. It has not happened during the World War. It has not happened during the COVID. And it is not going to happen also. So the exchange traded funds, the difference between exchange traded funds and the mutual funds. Now, what has happened is these are the data which is available on the websites, online on Google. 63% of the equity mutual funds have failed to beat the benchmark index in 3 years. If 63% of mutual funds have failed to give better returns than the index itself, then what is the purpose of you investing only in mutual funds? And many times for us, we are investing in mutual funds through agents. That is the main issue why you do not really make money when you are investing it via some agent. When you invest it on your own, you are removing that agent fees and agent calculation, and you're doing everything on your own. Whatever fees you are paying to the agent, that is all also yours. Now, someone might ask that the agent is not charging me more than 1%. Why should I be breaking my head? And I should rather concentrate on my practice and let that agent take 1%. What's the big deal? 1% hi to hai. But that 1% is not just from your investment. It is from your profits and everything. So when you're investing it over a period of say 20 years, 25 years, 30 years, that 1% translates into literally crores of rupees. So basically you're paying the agent crores of rupees over these many periods. And imagine that agent has multiple doctors like us on his payroll. So that agent is earning much more than what we are earning. And he is just saying that I'm going to charge 1%. So the types of ETFs which are available for our investment are the Nifty Bs, the Junior Bs, the Bank Bs, the Mid 150 Bs. These are the names which are available. You can search them. So when you search for Nifty Bs, you can buy right from 1 unit, 2 units, whatever you want to buy, you can buy. So the Nifty Bs comprises of the top 50 companies. Junior Bs comprises from 51 to 100. Mid 150 Bs comprises from 101 to 250 ranks. Now, bank Bs is something. Bank Bs means they are investing only in the bank stocks like HDFC, SBI, then all these nationalized banks, Axis Bank, ICICI, all these banks, they will invest your money in that purely bank sector. So this is sectoral exchange traded funds. There are multiple sectoral funds available like ITBs or Pharma Bs or anything, but you don't have to invest in all those things. If you invest in Nifty Bs, Junior Bs, and mid 150 Bs, your top 250 companies are covered. You're directly investing in those top 250 companies. Then comes the bond ETFs, that is a liquid Bs or liquid case. We are recommending liquid case than liquid Bs because the calculation of the taxation of liquid Bs is a little tricky. Liquid case is far more simpler. So this is a debt fund. This works like your fixed deposit. Okay. And then there are commodity ETFs like gold Bs and silver Bs. Okay, so if you invest in Nifty Bs, Junior Bs, mid 150 Bs, liquid case, gold Bs, and silver Bs, you're basically investing into the top 250 companies. You are having your own FD, and you are also investing in gold and silver. That these are paper gold and paper silvers. So what does Bs mean? Bs means benchmark exchange trading system. Okay, so these are currently managed by the Nippon Asset Managing Company. We are recommending these Nifty Bs, Junior Bs is not as tips, but as the funds which have the least expense ratio and they have the large trading volume. That means that there is no problem with liquidity. There are so many people buying and selling it that you will never be in line for a long time. Which can happen with other instruments. So ease of calculation is basically their value is like 1% of the underlying index. Now Nifty today is around 25,500. So Nifty Bs, a single unit would be costing around 280 rupees. Why 280 rupees and not 250 is because it is calculating all the dividends which the companies have already received in those top 50. So for our ease of calculation, we'll say that if the Nifty is at 26,000, the Nifty Bs would be costing 260. However, its cost will be around 30 or 40 rupees more than its 1%. So this slide shows the underlying, the benchmark. So the ETF is Nifty Bs, the benchmark is Nifty 50 index, the Junior Bs is Nifty Next 50, mid 150 Bs is Nifty Mid Cap. There's something called as a MON 100 for those people who want to invest in US stocks but cannot do so. So you can invest that in MON 100. MON 100 is Motilal Oswal Nasdaq 100 fund, which invests directly into the top 100 listed companies in the Nasdaq index. Now, why we are saying, that this is the comparison between the ETF and the mutual fund. So ETF is a generic medicine, while mutual funds are branded medicines. So for brand, of course, they'll be expensive. So they work the same way. In fact, many times I'm not saying that this is not a direct comparison with pharma industry. It should not be taken like that. It is just an analogy so that we understand better being medical persons ourselves. That many times we have seen that generic medicine works better than the branded medicines. So this is what we are saying, that ETF is like a generic medicine. Now, who can invest in ETF and what they can expect from it? People who want to invest for a minimum period of 7 years. Them, okay? People who are even at the age of 60 or up to 60 can invest easily without any issue. Beyond 60, capital creation or wealth creation should not be the goal. Capital protection should be the goal. However, at the individual level, have seen that after joining WealthCon, people are doing active trading also at the age of 65. So age is no bar for learning, or age is no bar, but this is just a recommendation. People with low to medium risk taking capacity, people having a wealth creation goal, and people with zero experience, all these people can do investment in exchange traded funds. Now, I mentioned about the names of the exchange traded funds. Now, how to invest that? So the strategy to invest them is called as systematic investment plan. I will show you the Excel sheet of how the calculation works over a certain period. Now, I think in our group, those people who are attending today, there are people ranging from maybe 30 years to 60 years. I exactly don't know the ages of everybody, but I'm presuming that an average age is around 40 to 45. So the strategy to utilize the ETF as the best is systematic investment plan. Now, how does this work is you decide a day of month, like 4th day of every month or 5th day of every month. I'm going to invest so and so, such and such amount in these funds. So regardless of the market situation, you are going to invest that amount of money in the exchange traded funds. For a rough example, if we start off with saying, I want to invest 1 lakh rupees right now, every month. So should I invest the entire 1 lakh in Nifty alone? Or should I invest 1 lakh entirely in gold alone? Where does diversification come? So you split the 1 lakh rupees into say 20,000, 20,000, like 5 or 6 funds, and you invest 15,000 in one fund, 15,000 in another fund, like that. So 15,000 Nifty Bs, 15,000 in Junior Bs, 15,000 in mid 150 Bs, 15,000 in gold, 15,000 in silver. And this is how you diversify your funds. So on that particular day that you have decided, you invest the money regardless of the situation of the market. You are not going to have to worry about all the cycles of the market. As you can see, the market goes up, goes up, comes down, goes up, comes down. No, on that particular day, you are going to invest that much money. So this is systematic investment plan. Now there is something called as adding on dips. Now what are dips? Dips are like this. See, on this chart, if you can see, there is this rally, the market is going up, and then suddenly the market comes down. Then the market goes up, then it comes down, then it goes up, then again, it's an up and down situation. So whenever you see that the market has dropped down, say 5% or 10%, you can add a little extra other than the SIP into the same funds. What that does is it averages out the buying price, and it gets you the opportunity to reduce your invested value. And over a period of time, if the investment value is reduced, over a period of time when it rises, that entire thing is going to give you more profit. So here, when I'm saying choosing the ETF, you don't have to worry about liquidity in case of Nifty Junior Bs or mid 150 Bs, because there are lots of participants in the market here. Okay. Other thing which we have to look at while choosing the ETF is the expense ratio. Now, expense ratio, what is expense ratio? Expense ratio is the amount of money which you pay extra from your own pocket for your investment for the fund company to manage it. So they are going to take their charges. So the expense ratio means the charges of the fund managing company which they charge to your investment. So that should be minimal. So that is why Nifty Bs, Junior Bs, mid 150 Bs work, because they have the least expense ratio. That means for every 100, if Nifty Bs, I think the expense ratio is less than 0.5 or 0.6%. That means for every 100 rupees invested, only about 50 paise of mine goes for their expenses. There are so many other companies which have these exchange traded funds, but their expense ratio is almost 1.5%. So that means that if I'm investing in that company, when I'm putting 100 rupees, they invest only 98 rupees and 2 rupees they'll keep it for themselves. While Nifty Bees invests 99.5 rupees and keeps only 50 paise for them. So as I mentioned, the benefits of ETFs are easy diversification, low cost, they are flexible, can be bought and sold off at any time. They are efficient, they're tax efficient as well, and there is a lot of transparency because they keep on disclosing their holdings on a daily basis. And liquidity is not an issue at all, and their tracking error is also very minimal. Now, this is the Nifty Bees returns. As you can see that this is the index. The pink one is the Nifty Bees, the blue one is the index, that is Nifty. So you can see that the price is following the same way as the market is going. The price of the ETF and the price of the market remains the same. However, you can see that from here on, the chart is moving up and there is a constant little bit of a difference between the Nifty Bees and the Nifty. This is happening because of dividends which the constituent companies are receiving, and that price gets added into the exchange traded fund. Similarly, the Junior Bees returns. This is a slide which shows the difference between the ETFs and the mutual funds. For the ETFs, there is no fund manager. For mutual funds, there is an active fund manager. Expense ratio is minimal while for mutual funds, the expense ratio is more. I mean, I don't have to individually talk about all these things right now. I think you can just read the slide. Yeah, the biggest advantage between ETFs and mutual funds is no exit load. What is exit load? Every mutual fund has a 1% exit load before 1 year. Like for any investment, if I'm doing in a mutual fund today, if I want to exit within 1 year, I have to pay 1% extra of the invested value. That is the exit load, which is not there in the exchange traded funds. If I buy an exchange traded fund today and decide to sell it next month, I can sell it off on a profit or loss, whatever it is, and it is settled or at gross actuals. Of course, tax I have to pay capital gains tax according to the short term or long term capital gain tax, whatever the bracket it comes in. But there is no exit load. While selecting the mutual funds, there are about 5,000, 6,000 mutual funds available. Yeah, which one I should select? I need to do study about it. Even that is easier. I mean, those people who are attending this for the first time, you can of course join WealthCon's basic programs and everything and learn how to invest in individual shares as well as in mutual funds. But ETF is something which requires least amount of study and least amount of time to be spent on the market. And the fund investment can be kept on automatic. So, this is the slide which shows which has been taken from the existing WealthCon members. So of those people who have done investment in the ETF portfolio alone, some of the investments have started in March 2020, some have started in November 24th. So you can see that the absolute returns from 55 to 155%. While an extended internal rate of return is almost 20%. The market gives a return of 12%. But here, this person has managed to get a return of almost 20% on the same Nifty Bees. How is that possible? That is possible by the addition on dip strategy. As I mentioned, SIP and dip. So when you do that, the returns can definitely increase. And this is not with trading, this is purely with SIP and DIP that this kind of an interest is achieved, this kind of a return is achieved. Why this return is important, I will show in the calculation. Once I finish the presentation, I'll take you to a small Excel sheet which I have prepared. I'll show how magical it can transform your portfolio to. Now, as I mentioned, there are so many doctors who have joined in WealthCon. So if our fellow doctors can do it, so can you. I mean, it's very easy and it is very simple. So when you go on to any of these brokers portal, you search for Nifty Bees and you see the name comes up, Nifty Bees. So that is Nippon India ETF Nifty Bees, which is Nippon India Exchange Traded Fund Nifty Benchmark Exchange Trading System. You don't have to remember the full form and everything. It is only for knowledge purpose I'm sharing. So every broker has a different way of creating SIP, but all these SIP can be easily created. You can go to the SIP, you can select either quantity or amount. I would say you select amount, not quantity, because the amount needs to be the same. If you decide to put if you decide to do SIP with the quantity, like if I want to buy 10 Nifty Bs every month or 100 Nifty Bs every month, because of the increasing price, sometimes I have to end up paying more from my pocket for the same investment. So that should not happen, because your investment money should remain constant. So you always select amount, not quantity. SIP frequency should be monthly, and you can start your SIP date and you proceed and you set up your SIP. That's it. That's all it needs to be done. So for people who have very less time learning finance, who are not interested in market tracking, investing in ETF by SIP and DIP method is the best strategy for your long-term wealth creation. Now, coming back to why as doctors we should learn finance. It is definitely going to be a secondary source of income for you. It is going to be creating a portfolio which is going to work for you in the long run because of the effect of compounding. And definitely, as you amass more and more wealth, you're going to become more financially independent. You're going to be able to do lot many things than just what you're doing currently. Because if you do not find a way to make money while you sleep, you will keep working until you die. This is what Warren Buffett had said. You can take down this number, you can take a screenshot, or you can just note down this number. I'll keep this slide on for a while. And you can just send a message to, this is the number of WealthCon admin, Natasha. You can just send her hi and she will so make sure that she'll check the medical degree and then she'll let you into the WealthCon's basic group. I think people who have attended the earlier seminars and everything, they would already be on WealthCon. There are many other courses available on WealthCon, like the Trading Mentorship Program or the Trade Vesting Mentorship Program, which teaches us swing trading into the shares and even futures and options trading, at the same time making sure that you will not be compromising or your private practice. This is the QR code. Anyone wants to scan, it will just take you to that WhatsApp page. And before we come to the question answer session, I will just stop the share for a while. I'll open the Excel sheet and I'll show you the calculation of how magically this transforms your portfolio. Can I switch off this QR code slide?
Okay, sir. Okay, sir.
Okay, I'll share my screen again. So you can see my Excel sheet, right? This is the Excel sheet which I just created some time back.
Yes, sir. Yes.
For example, if a doctor has just finished their MBBS right now, they would be around 23, 24 years of age. Consider 23. Okay. So they want to start off with a monthly investment of 10,000 rupees at the rate of return of 12%, which is the benchmark returns, index return. Over a period of so many years, index has given 12%. of returns. So at the age of 23, they start investing. And they want to invest until the age of 60 years. So which is 37 years, right? Time in 37 years with a monthly investment of only 10,000 rupees at 12% rate of returns and 37 years. What could be the final value at the end of 60 years? It will be 8 crore 27 lakh 45,114 rupees with an investment of only 10,000 rupees per month at 12% rate of returns. Now we have seen that certain doctors, as I mentioned in the slide, they have been able to get up to 20% of returns with SIP and DIP method. We'll not go to 20%. We'll just up this rate of return from 12% to only 15%. 3% increase, and you see what happens with the final value at the same 10,000 rupees investment per month. 8 crore 27 lakhs becomes 20 crore 5 lakh 6,410. What if this person got an interest rate of return of 18%? 3% increase, the same 20 crores becomes 50 crores. If they are able to get 20%, which is quite likely over a period of 37 years of investment with the same 10,000 rupees monthly, you can make nearly 100 crores. This is with only 10,000 rupees investment. In ETFs, I'm talking about, nothing else. You don't have to study about individual shares or anything. Time is the key. Time is where the compounding happens. Now, I'm pretty sure that over a period of time, any one of us will be able to invest at least 50,000 rupees on an average. If you have started early, you will be able to invest at least 50,000 rupees, which is easy, and we'll not take 20%, we'll just take it as 15% only. Just let it be that 50,000 rupees that easily crosses to 100 crores. That is more than 100 crores, maybe. I don't know this year. Yeah, 100 crores, 25 lakhs, 32,049. Wealth creation in long term is very easy. You just have to have patience, and long term means minimum 7 years. Long term means minimum 7 years. Why 7 years is that a market has never given a negative returns at any 7-year period. There will be cycles. There will be years where there will be no returns possible, like it has happened. So in September 2024 till today, that is February 2026, Nifty has not given positive returns. That person who has entered on September 2024 2nd, today their investment would be carrying negative returns only. But this is only short term, only 1.5 years. If you keep it for the next few years, you never know. I mean, the market is always looking up. So this is the power of compounding and power of investing over a long time. I just wanted to cover the ETFs and the SIP and everything today in 45 minutes, because this is a cramped session. We cannot discuss each and everything here. Otherwise, things will become blurred and the message will not be taken home. That's why I've just kept myself. I did not discuss anything more than the SIP and ETF and how it works. Definitely, there are many things to be discussed. We can discuss that on a common platform on WealthCon. I think we can open the session for question and answers, sir.
Yes, sir. Thank you, sir. Thank you very much for your nice presentation. I think many people will be there with a lot of doubts and questions like how to increase wealth. So over to the audience. Please just have to speak, ask the questions. Let it be crisp and short. Sir, to start with, I'll start with a question, because you said the insurance policies like life insurance or term insurance, like it is waste of money. But what about the pension schemes, like we pay for 10 years, 15 years, and then again they'll say for next 30 years, 40 years, the whole life they'll be repaying it back. What about those schemes? Is it
All
safe?
these things are double packaged schemes, sir. So basically, what they do is they will not give you interest more than 6%, whatever it is. Whether it is an endowment policy or whether it is a pension policy, it is not going to give you more than 6% per annum, which is what you can easily get by investing in a liquid case. And what you're investing in these pension policies or endowment policies is for a very long term. So over a long term, 6% is going to destroy the value of life, value of your money. What has happened? There is a very clear example of what I can talk about. There was a discussion which happened when a person who has invested in the LIC policy in 2020 and in 2000, in the year 2000, he started investing with 50,000 rupees yearly. Today, his policy has matured and he has got back happily around 20 lakh rupees. While the agent who has sold that policy to him and to many others like him, that agent has got 2 crore rupees today. So this is what happens. It is the agents who make more money out of these policies than the person who has taken those policies. That is why the double packaged insurance schemes do not work. Insurance for us is purely term insurance, that is life for life. That is pure. It generally covers all sorts of deaths and no questions asked. The policy nominee will get the money. While in these endowment policies, there are lots of paperwork involved and everything, and it takes a lot of time for the money to come to the nominee.
Okay.
There is something called a systematic withdrawal plan, which we have not discussed today, which might be a purview for some other session where we can discuss systematic withdrawal plan alone. That works like a pension plan. So what happens is until the age of 60, you're creating wealth, you're investing a systematic investment plan. And over a period of time, now, as I showed the example here, 10,000 rupees of monthly investment over a period of 37 years till the age of 60, you create some amount of wealth. From that, you start withdrawing 1 lakh rupees every month. Let that investment be there only. That investment will keep on increasing every year. From that, how much ever you want, like 1 lakh rupees per month, you can keep on withdraw. That is called as the pension plan from WealthCo. That is systematic withdrawal plan. That we may discuss as a separate session itself.
Thank you, sir. And there is a question in the chat box. What is the investment limit, investment timeline for an investor after the age of 60?
As I mentioned, sir, after the age of 60, the goal should be capital protection rather than wealth creation. So even at the age, after the age of 60, you can still invest, but I think the safest choice of investment would be ETFs alone. Time horizon is left to individual. But even if you're starting investing at the age of 60, the 7-year rule has to be followed. That is, a minimum period of investment is 7 years. Maximum is left to you.
And which is better, gold or mutual funds?
So diversification requires that we should invest in gold Bs as well as in ETFs. So which is better? That is like comparing Aishwarya Rai and Madhuri Dixit. For some people, Aishwarya Rai will be looking better. For some people, Madhuri Dixit will be looking better.
Okay.
Sir.
Yes, sir.
Sir, I start doing SIP from now on for 15 years. So after now, till the 15 years, the market will be very good. It will be upward trend. So after 15 years, in 6 months, if the market goes to 40% or 50%, what will happen to my SIPs?
Sir, what has happened is see, this is a good question, because we have seen that happening in COVID crisis, that the market has fallen 40%. But on the other side, we also saw that the market has gone almost 100% from that level in the next 5 years. See, the market was at 12,000 level when market means Nifty. Nifty was at 12,000 level when the COVID crisis started happening. Then from there, the prices fell to 7,000 rupees. Within a span of 1 month, the market fell from 12,000 to 7,000 rupees, which is 40% of value gone. Now, those people who have invested when the market was earlier at 6,000 rupees 7 years ago, after 7 years, their value became 7,000 rupees. That is, they still made a profit of 1,000 rupees. But if they exited from that fearing that the market is going to go down further, then they would have only made profit of 1,000. Had they caught that dip, okay, the market, and they invested a little more, in the next 9 months, not only did the market recover completely from at its previous level, over a period of the next 4 months, it has gone more than 100% from that level. That it was at 12,000. Now today the market is at 25,000. So more, the double would be 24,000. It has gone 1,000 higher than that. Now imagine any person who would have entered at the level of 7,000. For them, it is like a 4 time, nearly a 4 time gain, isn't it? So that is why we say that, the market cycles will be there. So if after the age of, after 15 years of period, suddenly the market crashes, you just have to trust and wait and add a little more and wait for a longer time. But when this problem happens only when you do not have an exit strategy. Now the exit strategy is two types of exit strategy. One is time target and one is price target. Time target means I'm going to hold this investment for a period of 7 years or 10 years or 15 years or whatever it is. And when the time has achieved, definitely it would be in positive, I exit from that investment. Other is a price target. That means I am saying that I want 20% returns on this, or I want 100% returns on this. As soon as that is done, I exit. So if you have this exit strategy in mind, you will not have this fear of losing more or fear of losing gains.
Only those people who are active in markets and who know the technicals very well, they can do, as you said, time exit and price exit.
No, sir.
Suppose from
even
that,
for SIP and everything, time target and price target is followed.
yeah, same. But after that 40% fall, it recovers a bit, and then again it goes another 25-30% down. What about the SIPs?
So that is where the diversification comes into play, sir. See, when it has been observed that when the equity falls, the gold rises. When the gold falls, the equity rises. So that is where the question of diversification comes in. The portfolio has to be diversified into gold, real estate, equity, and debt. Now, real estate, I'm not discussing today. Gold, equity, and debt, we can, when we are diversifying that, this manages the portfolio. Because if those people who have invested both in gold and Nifty, and they saw that the COVID saw that their Nifty value has gone down completely, but at the same time, their gold value had gone up. So a portfolio should have all this in balance. Then even if one thing goes down, the other thing will manage it.
So next year, gold may fall down. We'll be
Possible.
doing SIPs. This
Possible.
year, Nifty has
Possible.
gone down.
Possible.
Next year, gold may, another year,
It has
real
happened
estate
just
might
now.
go down.
It has happened recently only. February 1st week, the gold fell massively. Gold and silver both corrected almost 20 to 30%. Silver even corrected almost 40%. But now they're rising slowly again. So it's just a cycle.
Sir, how to wisely identify a dip, as you said for SIP? How to identify a correct dip or averagely a dip? This is the dip I can invest more.
Sir, so whenever the market corrects 5% or 10% from its high, that is considered as a dip. So when you are doing for your SIP, you can keep a track on your prices. Say, so for example, now I started SIP when the Nifty was at 20,000 level. So I would have invested from 200 rupees on a Nifty base. So when the market went up to 220, 230, 260, it reached. That is in September 2024, 260 it has reached. Now, after that, I see that the market is falling again. It has come to 250 level. I add a little more. It has come to 240 level. I add a little more apart from SIP. So all these things, all these points correction, no, you can consider them as dips. The dips will be many. There will be plenty of dips. So you can keep a target of 5% or 10%. You can call 5% as a dip or 10% as a dip.
Okay.
In
What is the
SIP,
ideal?
there will be a fixed time, no? So on 2nd or 5th of every month, if I make an SIP, on that, what will be the market index price? That level, it will be purchased.
Yes.
As you said, dip comes after 15th or 20th.
No, dip can come anytime, sir. Dip can come anytime.
At that time, it will not be invested.
No.
Sir,
SIP has to continue regardless of the market situation. Whether the market is up or down, you're not bothered. SIP time on 4th of whatever you've decided. Like I've decided that 4th of every month, I'll put this much in SIP. So that I am following regardless of the market situation. But whenever there is an opportunity that, there is a crash or there is a sudden downturn in the market, 5% or 10% from my level, top level of investment, we add more. That is called as adding on dips.
For that, you need more amount.
More capital. Yes, sir.
Yeah.
Yes, sir.
We need more amount.
More that
So,
that is an additional amount.
based
That
on
is an
my-
additional amount. That is an additional amount over and above your SIP amount.
Okay. Thank you, sir.
Suresh, sir.
Yes,
Sorry
sir.
for interrupt, Suresh, sir.
No,
sir.
please. No interruption.
Sir, make a goal. Have patience. Have discipline in yourself. That's all, sir.
Okay, sir.
So, and there are a few more questions in the chat box. Like how much saving should be invested in the gold?
How much?
How much of savings should be invested in gold?
Sir, it is based on individual decision. Like, as I mentioned that 100 minus the age should be the portion of equity. So suppose if I am earning if my salary is 2 lakh rupees and if I have marked that 50% of that I need to put it for investment. So that I will divide according to my vision. What I want more. Do I want more in equity? Do I want more in gold? Do I want more in debt? That I will decide according to my vision. So there is no fixed thumb rule or fixed rule that only this much has to be invested in gold or this much has to be invested in equity. So it is individual catered.
And there is one more question. Is a Demat account must for investment?
Yes, sir. For ETFs and everything, Demat account is a must. And most of these most of these brokers have online Demat account opening facility. You log in today and you finish up the process. The process takes hardly half an hour to finish. And within 24 hours to 48 hours, your Demat is activated. And you can start investing from the second or third day onwards.
Any more questions? So I think it is better to display the phone number and the scanner, sir, because many were asking
Yes, sir.
To join WealthCon.
I will display that just once more. I'll do one thing. Can I share it with Rajendra Prasad sir and he can share that in the group?
Yes, sir. Or
okay,
else you can share in the
I'm
chat.
sharing right now. I'm sharing right now.
Okay, sir.
I think everybody can note down this number and scan the barcode. and whatever doubts you have, or you can follow it up to Dr. Sirish. I think it was really a wonderful talk, sir, and it was a good guidance to all the doctors who want to invest in share market. I think we'll conclude today's talk. I would request Dr. Rajendra Prasad to give vote of thanks.
And vote of thanks will be given by our member, Dr. Rajalakshmi.
And just listen to the song. It's a brilliant song. And one of the reasons why I absolutely like the song, apart from the fact that it's a Shashi song, is that just about 3 saal pehle, before this the film was made, in 1965, Shashi had this super duper hit, Jab Jab Bhul Ke Liye. And in this song, he's actually spoofing his biggest hit song, Pardesiyon Se Na Aakhiyan Milana. And I think it takes immense courage to take oneself lightly and laugh at oneself. It's a brilliant song, Shashi in drag. I mean, all the 4 antaras are absolutely fun. And Shashi is a
Over to Dr. Rajalakshmi for vote of thanks.
Yeah. Good evening, everyone. Thank you, sir, for this opportunity. First of all, I would like to thank Dr. Shirish Narsapur for such an informative talk on intelligent investing for doctors. His concluding remark that if you want to sleep well, invest your money so that you can keep earning when you're sleeping also was a good take-home message, I feel. I would also like to thank our president, Dr. Veerabhadraya sir, Secretary of IMA KSB, Dr. Suri Raju sir, for the opportunity. Thanks are also due to Chairman of Public Health Committee, Professor Dr. Pavan Kumar sir. I would like to acknowledge the presence of our President-elect, Dr. Harish Delanbettu sir, Dr. Narayan Naik, Dr. Anuradha Parmesh, Dr. Indira, and all the viewers who have watched it on Ortho TV and all those who have logged in. Also, thanks are due to Dr. Karaveer Prabhu Kalkonda sir. Thanks to Dr. Rajendra Prasad sir also for being the convener of this program. Thank you, everyone. Thank you for the opportunity, sir.
Thank you.
Thank you, everyone. Thank you.
Thank you, sir.
Thank you.
Thank you.
Thank you.
Thanks everyone for patient
Thank you.
listening. Thank you.
Thank you.
Dr. Pavan Kumar, shall I close the meeting?
Yes, sir. Fine, sir.
Okay, sir. Thank you. Thank you.
Thank you very much, sir. Good night, sir. Good night, everyone.
Thank you, sir. Thank you. It was nice.